Today, I couldn't wait until tomorrow to discuss what we've just witnessed from Palantir's latest earnings report. We're all about long-term investing here, but what Palantir accomplished this quarter is simply too extraordinary to ignore. Forget the stock price, I'm here to focus on the numbers, which are, without exaggeration, groundbreaking. Palantir just delivered a year-over-year revenue growth of 30%, U.S. commercial growth of 44%, and a massive guidance upgrade. Let that sink in, they aren't just meeting expectations, they're blowing right past them. U.S. commercial growth, specifically, hit 54%, which is astonishing because this sector defines the core of the tech market. For context, U.S. government growth also surged to 40%. Palantir has spent years claiming it would differentiate itself from typical Silicon Valley players. With this quarter, they're not only backing that up but are proving they're ahead. It's their strongest performance to date. Despite the huge expectations placed on them, they've somehow managed to exceed them in a way few could anticipate. Here's a concrete example. In the first 9 months of 2022, Palantir posted a net income of $120 million. Fast forward to this year's first 9 months, and they've generated nearly $400 million in net income, a 225% increase. And what's even more impressive? They only increased their operating expenses by a modest 8%. Show me another company on this planet that's hitting these kinds of growth numbers on such controlled spending. Palantir is a unicorn, redefining what it means to scale in tech. They've secured over 104 deals worth $1 million plus each in this quarter alone, with a 40% growth in their customer base. But here's the standout metric, their GAAP net income margin has hit 20%. Achieving this margin in the current economic climate is rare, to say the least. For tech investors, the Rule of 40 is a crucial metric, which combines free cash flow margin with revenue growth. Palantir is currently hitting a score of 68, numbers only giants like Nvidia can rival. A 68 Rule of 40 score, a 225% year-on-year net income growth, and 54% U.S. commercial growth? These metrics signal one thing, Palantir is on the path to becoming one of the most crucial players in tech. And if that's not enough, let's talk about their cash position. Palantir is sitting on $4.6 billion with virtually no debt, allowing them flexibility that most companies can only dream of. But even more staggering is their free cash flow margin this quarter, which hit 60%. Over the past 12 months, they've generated $1 billion in free cash flow, and they're guiding toward $2.8 billion for all of 2024. In the past 3 years, Palantir has expanded revenues while reducing operating expenses. Their EBITDA grew by thousands of percent, a feat few believed they could sustain. Yet here we are, with Palantir not just meeting but crushing expectations, making it clear they're ready to bear the weight of this growth trajectory. Let's be clear, this isn't about short-term gains in stock prices. The fundamentals here are what will keep investors up at night, thinking about Palantir's future. Alex Karp, now arguably one of the world's top CEOs, is leading Palantir to become a trillion-dollar software giant. It's not a question of if but when. As Peter Lynch famously said, it's never too late to invest in a generational company. Palantir may just be the defining software firm of our era, and today's earnings report proves they're on the right track. Remember, steady investment is the key. I'll catch you in the next update. This ride with Palantir is just beginning.